Okay, welcome everybody to Wall Street Reporter's next Super Stock, a live stream July 7th, 2022. We are back with Nextech AR, Evan Gappelberg, and of course, for anybody that's brand new to our program, our goal is to bring you those stocks which have that 10x to 100x upside potential. With that said, Evan, welcome back.
Thanks, Jack. Great to be back with you again.
Evan, listen, I appreciate you making time. I know it's July 7th. This is like the July 4th holiday weekend. A lot of people are taking vacations now, but look, as we know, money never sleeps, and this is a very good time to give investors an update, because like right now, while people think, oh, it's a bear market, recession, this, that, vacation time, stocks have been moving up, like the Web3 stocks, Roblox, Palantir. What is it? Unity is starting to go. Neo. They all have been breaking out of their 50-day moving average, which is an important technical indicator, as has Nextech. So, it's all part of a theme. Things are starting to happen, and it's always darkest right before dawn. So
it is. And just to add to that, Jack, I mean, I've been, around Wall Street for over 30 years. And the best purchases that I've made is when things were the most unclear, when some of there was fear in the market. And if you think about today's market in 2020, when the pandemic started, there was a lot of fear. The whole economy was shut down, right, unraveling, and I was actually thinking to myself, I had never seen this before. I've never seen an economy shut down ever, let alone the global economy.
Yeah, I don't think anybody has in the history of civilization.
So I was sitting there thinking to myself, wow, like I've never experienced this, no playbook. And I was like, okay, so the only thing I can do is believe that the world's not going to end, and that we will get back on track. And so anything that I wanted to buy, that was a good time to be buying, because there weren't a lot of buyers. There wasn't much competition. So that was a great time to buy stocks, to buy real estate. And I was buying both back then. It's stock in Nextech and real estate, in my investment portfolio. And so fast forward, the market explodes over the next couple of years, and here we are. Inflation's kind of taking center stage, and everybody's kind of like in this world, this chaos.
But let's back up. Right after the peak fear, I remember like March, April, the peak fear. Nextech also, I think it was down from it was like $1.50, $2 to like 50 cents. I forgot and then it took off. It went up, 15x within 3 months. So the opportunity. So it's amazing. The real money is made. I think there's a quote, is driving through the fears of other investors. It's like, and also buy, sell pretty, buy ugly. So the time to buy is right when things are ugly. But now we're starting to see, it's kind of like, it's almost like during the winter, things will look bleak, but that is when the roots, the green, this plants are starting to, they start to getting ready to blossom, to break out. So
and we're seeing that, we're seeing this now. I mean, the market is starting to catch a bid. I'm not saying this is the bottom, but it is important to kind of talk about
the overall theme. It's important for by the way, nothing here is investment advice. I want to make sure we're not giving in buy sell recommendations. I want to quickly run a little disclaimer just in case any here we go. Nothing here is a recommendation, but the big idea. So here's the other thing. So there's a couple of interesting things happening. Number one is, it looks like, based on stocks, these market leaders are starting to break out of the moving averages. And by the way, these are the stocks that peaked last year. Was it 21? DraftKings, a lot of these things. They're all the ones that peaked now are coming out of the 50-day moving average. So here's the thing. This is the time also is to get positioned in what's going to be the next big theme, the next big market sector, the next big theme that people are going to be excited about. We want to get positioned ahead of that big theme, like the famous Canadian Wayne Gretzky says, you got to be I go where the puck is heading. So, you got to be positioned where the thing is going, not chasing after a trend which is already gone left. So the next big thing, according to some of the smartest people, is Web3. We're starting to see this Web3. I think it's been called Metaverse, Web3. It's all kind of in one big thing, but there is a transformation happening, and Nextech is really, I think, at the epicenter of what we're seeing is a shift of the $5 trillion of e-commerce going into this Web3 thing with 3D models. And so today, Evan, what I'd like to do is I want to kind of get an update on three things. Number one is sales pipeline, which is very important. I appreciate your transparency and giving us regular updates on new contracts, pipeline coming in. Number two is WooCommerce integration, which is very big. I don't think people understand how big that is. And finally, I want to talk about the spin out, which we had some good news this week about more shares even. So
yeah, and then we could even talk a little bit about CAD to Poly and
CAD to Poly. Yeah, that even another thing that people don't understand the significance of that. But it's like nobody understood a lot of things when they first became big.
Yeah, I mean, primarily what I've noticed is investors just want to see the stock going up. Learning about the company and the story, that's a lot of work. And so what I think maybe we should talk about the spin out real quick, because that is heating up. And so we did announce that we're no longer going to list on the TSXV for a myriad of reasons. And it's all positive, as Jack, gives the thumbs up. The CSE is where Nextech got listed originally. They're a very proactive exchange. They really do support their issuers, and they understand what it is to be an entrepreneurial company. So
far better. I highly recommend companies avoid the TSX.
Yeah. So I'm not going to go that far, but the TSX does operate more like
NASDAQ,
like the New York Stock Exchange or something, and
capitalist system.
Yeah, and they make you jump through a lot of hoops. But anyway, that's not really the topic. The topic is by moving to the CSE and doing a direct listing, which is critical. That's the big, real story here, is that there's no partner. We're not paying an investment banking firm any fees. We're not working with a shell, and that was previously the way that we had structured this deal, where they were going to get a slice of our ARway spin out. And I've decided, well, if I could finance this myself, I don't need a banker, and our business is looking very, very strong, why give up a third? I'd rather give our investors a bigger slice than have some strangers in the deal. And so our investors are getting double the number of shares. And that's not the end of the line for our investors. Just to be clear, investors are going to get 3.2 million shares instead of the 1.6, and that means you're going to get 32 shares per 1,000, and that's a rough number. That's not to the to the dime, to the dollar, to the penny, to the share, but it's very close, right? So that's a big deal to me. I love the idea that I could reward our shareholders. Our valuation is going to be roughly 4 million pre-money, 5.5 million post. If you think about what I'm describing, it's a potential rocket ship, meaning I'm valuing this at 4 times what I paid for it. Right? We paid $1 million for this about a year ago. It's worth a lot more for so we're already experiencing a return on our investment as a Nextech shareholder. But the upside to that platform is quite significant. The competitors like Niantic are trading in the billions in terms of valuation. And so there is a very, very big opportunity there. as a standalone public company, I think we're unlocking the value of that asset, and that asset will have the a team. I meet with Paul every day, and there's a team of 12 engineers that work on nothing but that platform every single day. We're talking. We have about 10 deals, solid enterprise deals in the pipeline already on ARway. I mean, these are government-sized deals. These are very big. These are franchises. These are not no names. These are big names. And they're circling and they're asking, and we're signing NDAs, and things are heating up. And so that business, without even marketing it, without even having it public, without really any press release or anything promoting it, is already garnering interest from the market. So couldn't be more excited for that. And Nextech will be the largest shareholder. I just want to make that crystal clear. Today we own 100%. And before we do our capital raise, we'll own roughly 65%. And that was in our press release. After the capital raise, it'll go down. But we, meaning Nextech, will have a significant stake. So as that valuation goes up, Nextech's block of stock, which we will control and own, will go up in value. And in theory, Nextech's stock will go up in value, right? So if the valuation of the spin out, just for argument's sake, goes to $100 million, and Nextech owns, let's just say, half of the shares outstanding or half of that company, that's 50 million. That's our current market cap today. Okay. Right. And this can all happen, very quickly, because it's a dynamic market. It's really a hot market. I'm talking about ARway. And so, and with a focused team, I feel like it will get that kind of valuation. I'm not putting an actual number on it, but it'll get a substantial increase in valuation than if it was inside of Nextech. It would be much harder to value. And, that is the reason why we're spinning it out, again, to increase shareholder value. So that's really it. I don't know if you have any questions, Jack.
No, I just want to add to that is that, look, it's the setup is very good because, I like three things about kind of the structure of the deal. First of all, it's on the CSE, not the TSX, which is, a horrible place. You have, instead of doing a shell, you're doing it directly. So basically, the shareholders are getting a lot more than they would. So the shareholder value is being created. But most importantly, the deal is coming out, let's call it a $5 million valuation, right? So, from what I have seen, stocks, in the Canadian markets, the US, between 5 and 100 million, 5 and 50, there's a lot of room where they could run. So in other words, it's coming out at a reasonable valuation, which is, essentially a private, look, basically what I think probably VCs would value it at more than 5 million, or realistically, right? So it's coming out at a very cheap valuation. So there's a lot of upside already built in, right? So you have almost like, I don't want to say profit built in, but it's kind of is in a way, because it's coming out below comps, below peer comp of valuation to peer group comps, below private market valuations in the VC sector. So there's a path where if the company hits milestones, they make progress, they get some traction, when the market resumes, when things become a little more people in the Web3 trade, the theme starts moving, there's going to be a path to potentially I'm not saying it's going to go to but it could become there's a path to potentially get there if the company delivers. So we're not making advice, we're not saying price targets or whatever it is.
I do want to point something out, Jack. I do want to point something out, because this just came across my radar. Is that Niantic just signed a deal with the NBA to do a very similar metaverse spatial mapping real world spatial mapping experience. The same thing that we're rolling out with ARway is already in motion. It's in market, just starting with Niantic, which has this $3 billion valuation. They just raised 300 million. So, you know, if you're comparing us to some other company out there, if you want to do a comp,
this is direct comp.
That's only the only direct comp that I can see. And all I'm pointing to is that the market is now ready for this technology and embracing it. And we're feeling it because we're getting a lot of inbound requests. And just so everyone understands, this is not like this is software. This is pure software. What does that mean? That means it's highly scalable. It's a no-code platform, which means you're basically licensing our software. If you have an app, let's say you're Disney or NASA or some big operation that has their own app, you would license our app, our SDK, and bring it into your app. And now all of a sudden you have our whole tech stack and you pay us a licensing fee for that. It's easy. It's easy. And that's what makes these things go, you know, parabolic, is that it's a easy integration and it brings a lot of value to these platforms that are out there, these businesses. And I just see this going quickly. It's just going to go a lot faster, let's say, than some of our other tech that's out there. So this is going to be exciting. We're getting excited here. That's
no, it's a very, and again, the main thing that I want to point to is, look, this time to get into any type of thing is before, is you got to be where the puck is heading, and the puck is
early.
Web3 metaverse. We know this.
Yeah, you get in early. And if you own Nextech stock, you're going to get a slice of the ARway pie. It's really that simple. If you own our stock, you get a slice of that pie. Plus, we're going to continue to control the majority ownership stake, so you get to participate in the upside. Plus, we could get into our 3D modeling CAD business, which is also doing quite well.
Okay, so let's do it. Let's get a quick update on sort of the sales pipeline, like what's happening in terms of you know, the 3D model business, let's say new clients, pipeline. Give us kind of like an update so we get a sense of, you know, how things are starting to scale there.
Yeah, I mean, we have talked about this before. I mean, the Shopify has said this. The future of e-commerce is 3D. And, you know, you get a 40% reduction in return, 93% higher click-through rate, up to a 250% increase in conversions. That's why our customers, Kohl's, keeps coming back for more and more 3D models. Lighting Plus, Kmart Australia, CB2, Napa Auto Parts, Habit Furniture, Surplus Furniture. Stobley just ordered some CAD files, another round of CAD files. Decor Metal. I mean, there's a long list, and it keeps on getting bigger. And we keep on answering RFPs. The last RFP was for 1,000 models as far as a proof of concept. And, you know, that could grow very quickly to 10,000. We're working with some of the largest retailers in the world, and the demand is not stopping. The demand is only increasing, and ultimately, from where I'm sitting, it's only a matter of time before everybody really is on the, you know, using 3D.
You know, the reality is, look, what people know right now understand is that the move to the use of 3D models, you know, in e-commerce is probably going to be as big as the move going from, you know, printed catalogs to, e-commerce, starting in, the late 90s, 2000s, because, people essentially, and essentially Nextech is sort of like that toll collector on the highway to this $5 trillion highway of e-commerce. Anybody that wants to get into Web3, doing e-commerce in the Web3 metaverse is going to need a 3D product model, right? And Nextech is, I think, as you've said, the leading supplier of 3D models at scale. So it's a great position to be in as this theme starts to heat up. And again, we're still, I mean, not even in the early days. It's still like, but one thing, let's talk about. You put out a news announcement about you're also going onto the WooCommerce. You're doing the WooCommerce integration. So you're on Shopify. Explain the significance of that. Like, how big of a deal is that?
So a couple of things, Jack. First of all, we continue to execute, and I think it's important for our investors to recognize the fact that we did announce earlier in the year that we were going to go onto Shopify, and we did that. We also announced we were going to get onto BigCommerce. We did that. We also announced we were going to be on WooCommerce. We just announced that. What does that mean? It means that we basically cover the globe with our 3D ARtized 3D offering. Shopify's like 50% of the North American market. WooCommerce is about a third of the market. I mean, when you add it all up, we're essentially everywhere. So when you think about 3D modeling as, 3D models as the future of e-commerce, and you think that, we've only done, and I say we, meaning collectively, everybody's only accomplished one half of 1% of all the 3D models that need to be made. And so we're now expanding our presence. So as demand for 3D models rise exponentially, which it's going to happen, it's happening, the company, Nextech, is going to be, as Jack calls us, a toll taker. Essentially, that is kind of it. We'll be there turning 2D photography images, but also CAD files into 3D models for millions of e-commerce sites and merchants globally. It's an exciting time at Nextech. It really is. We're positioned, I believe, perfectly for the next wave of growth. And our business model is resonating with retailers, where, again, we charge anywhere from $10 to $30 per month per model. So, depending upon the complexity of the model, if it's super simple, a mirror or like something simple like that, a painting, it might only be $10 per month per model. But if it's something more complicated, like a couch with a lot of tuffets or something like that, it might be as high as $30 per model per month. And for Nextech, after a period of time, it's pure profit. And so it's the snowball effect, where right now we're laying the groundwork, we're building the relationships, we're getting our 3D models into market, we're opening up our presence with WooCommerce, BigCommerce, and Shopify. And so now it's really just a matter of time. I mean, it really is just a matter of time. We have the tech, we have the team, we have the business model. And so it's just a matter of time until there's enough 3D models in our ecosystem to take us to the promised land, which everybody knows is, profitability, right? Cash flow positive.
Evan, I want to slightly disagree. Because, as you always use the famous example of that show, was it Silicon Valley? If anybody's seen that show, the revenues, that revenue speech.
Yeah.
It's not about it's about what the thing.
Well, it's a scorecard. It's a scorecard. It's
the market. Yeah, but the market, I think, is going to value. It's going to value once the Web3 theme starts to get legs. I think once this thing gets legs, metaverse theme, which is probably going to be coming up very shortly. There's very few pure plays, And Nextech is now it's a pure play. You're getting out of that e-commerce, the legacy business. Pure play now, pure play e-com is Web3, and the market is going to be looking for a pure play, especially in the microcap space, because who's out there? You got I don't know, Unity, Matterport, Roblox. They're all very different, and no, I don't think any of them are really doing anything in e-commerce. So it's going to be one of those things where people are going to say, "Wow, these guys are a leader in this $5 trillion market opportunity that they could potentially dominate with this thing." So it's going to be very I think the promised land really is potentially $1 billion valuation. So I think that's when the market comes back, I think there's going to be the animal spirits are going to lift with investors, and we're going to see the good old days return, hopefully.
Yeah. No, I agree. What I mean by the promised land is, look, when we sign a deal, we charge them, and the more deals we sign, the more money comes in. So, right, it's just kind of it's self-fulfilling kind of prophecy. And so, that's all I really meant. But at the end of the day, we're
you got to generate revenue. We know. I'm joking in case anybody doesn't realize.
Yeah, if you can't sell what you're making, then you might be in the wrong business, right?
Yeah. So let's get into you've been talking about the CAD to poly thing. I think. Okay. By the way, let's get into some audience questions. We've got some questions coming in. So please, guys, ask your questions, because this is what this is all about. Ask your questions directly, and hopefully, Evan, you'll have some time. We can cover everything. We got some questions coming in on the CAD. I think some people are mentioning. And can you talk about, how big of a deal is this thing, this CAD to poly? Because you've mentioned it a bunch of times.
Yeah.
And, I don't know if people understand exactly how.
Let's address it. Let's address it. And it's becoming more crystallized for me as we develop the technology in-house. And as we start to field more sales calls and start to do more of this pioneering work. And so CAD to poly can be as big as ARway. So does that mean it's going to be another spinoff? Maybe. When you think about CAD to poly, think about Autodesk. Autodesk, the symbol is ADSK. And basically, they have 2D and 3D CAD software. CAD is computer-aided design software that's used by essentially engineers across all industries. They're a public company. They have a $40 billion market cap, and so you have engineers that subscribe to their SaaS platform to be able to work in CAD, computer-aided design, to design, whatever. So you have architects that, design and draft with CAD tools. You have building engineers that, work with fabricators to improve, structural documentation. You have civil engineers that work, in design and, again, construction and documentation. You have construction professionals, mechanical engineers, electrical engineers, manufacturers, car designers, which conceptualize and design and render automotive designs. And they do all this in CAD. All of this happens in CAD. Now, think about CAD as this very heavy piece of software that only I've never used CAD. Have you, Jack? No. Nobody uses CAD. It's very niche. It's only really engineers and the people I just mentioned, right? Okay. So in essence, those CAD files, those CAD drawings and designs are trapped. They're trapped inside that software, where I could invite you, Jack, onto my platform and you could see it. But if I don't invite you into my AutoCAD file, you can't experience it, right? So it's very niche. It's just a group of people that work in that with that software. Now, we have technology that unleashes those CAD files turns them into lightweight 3D models, the same 3D models that we're populating on websites globally today. We can do that same process using software. Instead of 2D photo images, we take the CAD files, and there's already hundreds of millions of these, and we convert them. And it's all autonomous. It's all software. There's no human. There's no actual person. It's an additional button that would be installed on, let's say, Autodesk's software. So you're in your CAD. Yeah. So you would be, let's say, in your CAD.
Okay. It's like an app. What are they? I don't know what they call, but it's like
you call it an
extension. I think they call it an extension, right?
Plugin. It would be a plugin. A plugin.
How big is this how much is this worth? I mean, like for investors,
this is an opportunity. This is a multi-billion-dollar opportunity because it lends itself into so many applications. So think about all the products that we buy on Amazon or Shopify or whatever, back to e-commerce. Guess what? They're designed in CAD. Some engineer is tasked with designing those products, and then they hand over the CAD file to a manufacturer in China, and then the Chinese manufacturer starts building a mold or a fabrication plant or what have you, and producing the product to spec. And the product leaves the factory, gets on a ocean, freight ship in a 20-foot, 40-foot container, ends up in our port, gets shipped by truck to some warehouse. You order it online, it comes out of the warehouse and goes to you. But before you order it, you're seeing it in 3D on the web, on your phone. And you're seeing it in augmented reality. All of that is what we're after. And if you think about the trillions of dollars in global commerce, that is where we are going with our tech. That is where the demand is coming from. It's coming from manufacturers and brands that want to be able to have their customers visualize the product before they buy so that they're lowering returns by 40%. That's huge. That pays for the software itself, increasing someone's confidence when they're looking. Maybe I'm gonna buy, maybe I'm not. I'm not sure if it's gonna fit. Not sure.
It sales dramatically.
It drives sales. ROI, ROI, ROI. Return on investment is huge, and that's what's driving the adoption of our tech. So today, we have the 2D to 3D in market. That's WooCommerce, Shopify, BigCommerce, and that's the business that we've been talking about for the last 9 months. We're now getting ready, meaning we already can do this as a managed service. That means people are sending us CAD files, and we're converting it today. It's happening now. The tech is real. It's not a pipe dream. What we're working on over the next couple of months is turning it into a self-serve plugin like we just talked about, where it can be used on Autodesk, or you could just use it on our platform. We're going to create essentially a website that you can load your CAD files onto and ultimately convert to these lightweight poly files, which allow you to then populate your website with these 3D models. And it's all frictionless, it's all seamless, and it's huge business. And we can't be more excited about it. We're just getting started with marketing this to engineers, and we're already getting a lot of early interest. So it's exciting.
Okay, we're going to get into all the questions in a second. We've got some great questions. My last question on this is, okay, so basically the CAD to poly. So now you're really kind of going direct to the source of from where the product is. Before you're getting the image. So now it's really kind of does this potentially? But in other words, once this file is made, right? Once the manufacturer makes this, that essentially kind of this makes it sticky because now you're like the de facto standard in a way.
That's it, Jack.
That file is that's I think a valuable position.
Yeah, we own the market at that point. Let's just, I don't want to say monopoly because that's not a good thing in some way, right? But it does set us up to be essentially the dominant, where it's like,
Like
okay,
Windows, like Google, it's becomes
it,
that's the standard. I mean, we
yeah,
can,
I mean, it's
yeah,
kind of like, I mean,
they accept the choice of the market.
yeah, I'm trying to think of an analogy where it's like everybody has to use it. I mean, it's almost like, you know, when you travel down a highway, if you want to go down the highway, like you said, you got to pay the toll. If we're supplying manufacturers with this software, they're going to use it. And so everything that comes out of the factory is going to have this lightweight 3D model that'll go on the web. And now all of a sudden, any competitor of ours that exists today, it's kind of like, yeah, it's like
And
they,
there's millions of these SKUs. I mean, I don't know, a billion. How many products? I mean, it's like everything. Like, I mean,
it's
everything. I mean, there's
everything
like,
that's ever been made and
right, like
everything
the pen,
going to be made, Jack.
right?
It's everything that's been made and everything that's going to be made. It's everything. And
It's
so my CTO is the most excited about this technology, and he's the guy who's actually the genius behind this, and he's been working on this for years. This isn't, I call it like, it's almost like the glimmer in his eye. It's like he's been working on this, and we are now bringing it to market. And that's what we do at Nextech. If you want to understand Nextech, this is what we do. We find undervalued either technologies or people that are just starting to develop the tech. We incubate them. We work on building infrastructure around the tech, and then we bring it to market, and potentially we spin them out. I mean, that's what we're doing with ARway, and there's no reason why we wouldn't continue to do that.
It's interesting you mentioned that, because in a way, I mean, I don't know if maybe, but in a way, Nextech, I mean, it essentially is kind of, I mean, I think you can go much further beyond just AR. This, it really is like a technology development company where, again, this is what's been happening. There's been a lot of shareholder value created over the last couple of years with, again, finding these kind of undervalued tech assets, repositioning them and bringing them to market. Some have worked, some not as well, didn't work as well, but value was created meanwhile. And that's the whole idea of venture capital. You only need one hit out of 10, and that creates billions of, I mean, it's like, that's the way it works. And
yeah,
maybe, I don't know if do you see that as a future for Nextech potentially?
So here's the thing. I
couple years down the road, maybe.
I think of myself as a home run hitter. That's just the way, I always get up to bat. Ever since I was a little kid, I swing hard. I swing hard. I swing for the fence. Now, that comes with its own challenges, right? You go up there, and I'm going for the home run. Now, obviously they move back in the field, and they know I'm going for the home run. So people would get positioned. So, sometimes I'd pop up, but it'd be deep and people would say, ooh. And then sometimes I'd hit the home run, and sometimes the grand slam home run. And, not many players would go that hard. I noticed that over time. And I would also strike out, right? I mean, that happens too. So
Babe Ruth also, he struck out more than anybody, I think, right?
Yeah.
But he also got more home runs.
Yeah. Now, not many players go that hard, but I realized, along this journey, in life, that it's just as hard to succeed at that grand slam as it is to, be swinging for the singles. It's really just it's just a mentality. And so my mentality is, when I look for acquisition targets, or when I go into a business, I want there to be $1 billion upside. Million is not a big deal anymore. In today's world, $1 million business is the deli on the corner or whatever, right? It's not that big a deal. So from my perspective, if we're going to be a public company, and we're going to try and create shareholder value, we have to be going for the grand slams and the billions. And I think that with ARitize 3D, we're doing that. I think with ARway, we're doing that. With this CAD to Poly, we're doing that. And wouldn't it be amazing, Jack, if we hit 4 grand slams?
Listen, all these things. It's just a question of when you have a model that works, right? In any type of, when you have a system that works, when you have an edge in a market, whatever it is, whether it's a trading system, whether the sports, whatever the betting world is, whatever it is, any type of business, as you apply and as you get enough, multiple shots on goal, more swings at bat, your probability of getting those grand slams increases. Sometimes you get the grand slam right away. Sometimes it happens after 10 at bats or whatever. And I think this is the same setup with Nextech. It's a question of time, because right now you're using kind of a winning system, and again, you're going for the big, you're going for the, these massive opportunities. So that is, I think, what makes this thing so compelling.
You had a number of grand slams. I remember, I mean, your whole platform is built on this idea that, hey, if you're an investor, you should go for the 10x. And
yeah, I agree. Yeah, it's just as, especially in the micro.
The same mentality. Right. That's why we get along, Jack.
Right. I mean, this is the thing. I mean, I say, look, 10x to 1. And again, I've taken a lot of heat saying, oh, 10 bagger potential, 100x. Yeah, I mean, I'm looking for those stocks which have that 100x potential. It's funny. We've actually had a few stocks that have turned out to be 100 baggers. And when I met, I didn't think they would be. Like one of them, I was just looking back because I met a guy who. Do you remember Taser?
Yeah, I never remember.
The Taser, actually, we did an interview with them way back. I think it was like 47. It was like in early 2000s. And I thought those guys, I mean, I thought the whole thing was goofy. And the stock was kind of a bit of a joke, whatever, But, and they were on the, and that became, if you look at the chart, what's like, I think it was $200 recently. Yeah. So that might have been a 200x, a 4, I don't even know, huge number. So it always happens, and especially things that you least expect. Taser was a joke on Wall Street. I don't know if you remember, early 2000. I considered like, oh, it's a goofy thing. Oh, it's a scam.
Remember. Yeah, I mean, even the name today, it sounds like cool, but like Taser, it was like what? It sounded ridiculous, and the CEO was very goofy. And his father worked there too. I think it was like a family.
It was a family. Yeah, I remember the interview. The father and son, they sat in the. This was one of our first video interviews. Yeah, but it was. I might have seen the guys hit a home run of all home runs out of the park. Like they've created. I mean,
I actually remember, and
I was wrong.
But here's the thing that's important to remember about that, because I actually remember that really well, because I think I invested back then. So Taser was actually in a heated legal battle with another company that said that they were infringing on their patents. And the two of them were going at each other. And this went on for years. And there was like this dark cloud, and they were spending all their money on legal. So what I'm getting at is a very, very unsure win. It wasn't a guarantee at all. And then Taser acquired this competitor. They decided, like, all right, they just acquired them, and the rest is history. But you couldn't predict that, right? It looked like they were going to fight to the death. And the point is that with these startups, you never know. There are always going to be twists and turns, and it's never a straight line. Look at Nextech, right?
Yeah, it's not linear. Sometimes it happens. It's not, the success isn't these. It's never linear. It's always like it's failure, and then 100x.
Yeah, but
we're looking for that 100x. And this,
Jack, I don't think we ever spoke about this on your show, but I have a compensation package, me personally, which is tied to increasing the valuation of the company. Meaning there are milestones that if I achieve, like today's market cap's 50 million, I think I was just looking at it, my first milestone's 200 million in market cap. If I'm able to achieve that, I get options. And then the next milestone's like 250 million. And it goes all the way up to $1 billion. So
just like Elon Musk had something.
Elon Musk, yeah. So my incentive is aligned with shareholders, perfectly aligned. That's pure, incentive, right? Where if I have nothing against the CEO who makes lots of money, and I make lots of money right alongside them, right? The only guys I have something against are the guys that suck big salaries out of losing businesses. They don't create shareholder value, but they still get paid big money. That's just ridiculous. Like the CEO that got kicked out of Bed Bath and Beyond probably got, here's 5 million.
Yahoo, I think she got 100. Yeah, it's an epidemic in America. But no, so this is the thing about Nextech is everything is, the shareholder value, you're aligned with shareholder value.
Yeah.
Let's and again, multiple shots on goal going after these kind of really massive market opportunities, which at some point, you're going to connect, the bat's going to connect with the ball, and we could see some generational wealth opportunities created. Again, not giving any investment advice, but it is what it is. All right, let's get into audience questions. BJ Houghton, now hoping with the whale, what's going on with the whale?
So we're working with the whale, and the deal is progressing very nicely. And we're moving through stages with the whale, and there's not much I can reveal other than the fact that it just doesn't get any better or bigger for Nextech and Nextech shareholders, and it's really just a question of execution on the business with them. So that's moving along quite well, and everybody feels great about it. And by the way, just to be clear, our CAD to Poly tech will ultimately play a role with the whale and all of our other customers, because we'll be able to offer that not just to engineers per se, but also to these big e-com marketplaces as a plugin. So,
and again, once you have the CAD to Poly, that kind of gives you an end run around any potential competitor coming up with, because
it's kind of like
right from the source.
It's kind of like a secret weapon. I would almost, think of it like, do you remember the Gatling gun was like a big breakthrough?
Yeah. Or like MS-DOS, the program for Windows. I mean, you need the operating system basically. So once you have the operating system, that's kind of it. You own the PC world, right? So
yeah.
Do you have enough information from shop integration to guesstimate the number of conversions you might get on Woo?
I mean, it's a very interesting question, but I would say no, we don't. It's not really related to Shopify integration as far as our guesstimate. Each platform's very different. What we've noticed is that it's not apples to apples. Yes, it's e-com, but it's a different kind of customer, a different kind of audience. And so we'll have to see how that plays out. In terms of how many unicorns,
how many? Because so we got because you remember, Evan, do you remember early on we talked about Nextech as a potential unicorn factory, unicorn farm, and now it's happening. It's happening. Yeah. The first unicorn egg is hatching into the AR maps. How many of these are you sitting on?
I see 3, and the 4th one's in gestation. Yeah, so
it hasn't come out. It hasn't come out.
There's 3 in the pen. And the 4th one's gestating.
Okay. So this is this is very, very exciting. So essentially, this is very okay. So Michael's saying 5 to 6.
That's a little more than I see. So
okay, potentially okay. Let's see. Let me catch up. Okay. With the recent spin-off AR Maps selling off the again, you're kind of selling off the e-commerce inventory, getting out of that.
It's going to improve quite dramatically.
Okay. Michael's asking, have you been hiring people lately, programmers?
We have a lot of programmers. And basically, what we do is we outsource some of our activities to India, and so we kind of are able to flex up and down. We've kind of shifted. So in-house, we are not hiring programmers currently. In-house, we have our core team, but what that core team does is really work on the proprietary tech, and then we outsource some of the, maybe more mundane development efforts to India at low cost.
Are we still expecting profitability by end of this year or early next year?
Yeah. So, again, we've shifted our focus a bit to increasing shareholder value. As Jack mentioned,
it's not what you earn, it's what you're worth.
Yeah. Yeah. Right. So the focus is.
Do you want the stock? Do you want the company to earn 5 cents a share, or do you want the stock to be $5 a share, $50 a share? No.
Yeah.
By the way, this is humor.
It's not that quite that simple, right? So think about it like this: like we're spinning out ARway. If we kept ARway, we would, have a completely different kind of business. And so the idea is that we're going to incubate, commercialize, get our businesses to the point where we think they can stand on their own and create more value for Nextech shareholders as standalone companies. And then those standalone companies' goal is to become cash flow positive. And it's really Nextech, we're kind of like an investor in these companies, and we're building the value for our shareholders. And so it's a bit of a shift in our business strategy. If that wasn't clear, I hope this does make it clear.
Okay. Benjamin is asking, can you talk a little bit more about the size of the deals you said were like, you have government, did you say government contracts?
Well, I said they're like government contracts. So, they're brands and government agencies, let's say. So these deals are essentially what's called POCs, proof of concept type deals, where these agencies and brands are looking, and we're talking about ARway, right? Are looking at that tech. They want to test it. They want to pay to test it and utilize it. And then after a period of time, they sign a multi-year contract. And so that number is undetermined.
Yeah. Have you had meetings with Autodesk about a partnership?
Not yet.
Do you see Nextech having more upside than Take-Two Gaming? By the way, just for context, anybody, so Take-Two Gaming was a company, you were an early investor and you helped take that public, and it went. Yeah. Was that 100 bagger? What was it? Was that?
It was a big win. It was a monster. So look, it's a tough question. Take-Two's been around now for 25 years, almost 30 years, right? So they're like an established company. If you are saying, hey, roll back the hands of time to when Take-Two went public and look at that and compare that to Nextech, I'd say we're comparable.
Yeah.
But it's not like you could compare us today at all.
No, but I think back then at the time of the IPO, they had basically they had like one. They didn't really have that much going on. It was
they had like a proof of concept. They did have a game, but gaming wasn't even that big back then.
Yeah,
and so at the end of the day, they made a lot of acquisitions. They made they raised a ton of money. They've been riding. COVID obviously helped them. There's a lot. There's 30 years.
There's a lot of things. Right. So, by the way,
so I would say check back in 30 years. Right?
Also, like the Taser story. Taser, I think it took them 20 plus years to get to that $200 stock price. But in the meanwhile, they had runs to like 20, 40 baggers or whatever it is. And I think, it's interesting. The more I think about Taser, the more I think, could be the same. Listen, we've had a lot of massive winners, come out of Wall Street Reporter. Like even, what's his name? That Michael Saylor, MicroStrategy. He was, we interviewed him back when it became a 100 bagger. Another guy, Donald Trump. He was interviewed on Wall Street Reporter. When he was running the the casino business, and he became president. So the great things start off on Wall Street. This is where you can find the next big thing.
Yeah, I don't know if I would put Donald Trump in the great things, happen.
All right, we're not going to talk about politics. We're going to keep it to stocks. We're going to keep it to stocks. What about Pitts? Is this how you get the exploding view from the original CAD files?
So I don't know what the exploding view you're referring to, but it's how you take a CAD file, which is a very heavyweight file, and really needs specialized software, convert it into a lightweight file where you don't use specialized software, where you could just use a tag and put it on the web, a little script, and all of a sudden now it's visible on the web. That's the thing. You could literally email it to somebody and it won't crash their computer. So it's just, you're changing the dynamic where that CAD file is no longer trapped on this specialized software just for engineers. It can be shared and traded with lots of people that don't have the CAD expertise.
We got an interesting question here, or comment, I guess. Do you see more customers coming around for 3D models, in a recessionary environment because there's more competition? So these companies, I think what he's trying to say is that maybe, a lot of these e-commerce companies, they're looking for an edge, and this is what.
Yeah, I think it's too early to kind of look at it like ebb and flow. I think it's really just go right now with 3D models. It's like, we're just getting a lot of interest, and it doesn't seem to be ending with the economy. As long as the economy doesn't completely implode, as long as we don't go through another implosion. Although, you would have thought that COVID would have killed e-commerce or 3D modeling, but the opposite happened. So it's very hard to predict. All I know is what's happening today, and today we're seeing strong demand.
Do you have the resources at this time to get CAD to Poly to the point where it's? I guess, will you need to raise capital for it, or how is that like?
Yeah, we do. We do have the resources. We do not need to raise capital.
Okay, and I guess at some point, if it needs to really scale as a standalone, you could spin it off, and that would raise capital. So it would be non-dilutive for Nextech, basically.
Exactly. It would be the same kind of structure as ARway.
Okay. We got the Nasdaq.
Go. We really went over this that Nextech is essentially on hold. I mean, there's no point, right? So at this
yeah, I guess we'll have to wait till the stock is organically above, was it $3 a share? I think you need now to whatever to. So let's revisit when the stock is $5.
If you look at the companies on Nasdaq, they're trying to retain their listing.
Right. A lot of companies they're getting letters. What is it?
Everybody thinks Nasdaq is nirvana, but it can become quicksand.
Yeah. Look, listen. There's at the end of the day, you're buying a stock because you want the price to go up. It doesn't matter where the price goes up, whether it's on Nasdaq, on the CSE. Look, we've had companies that went from the CSE, they went to Nasdaq, and then they fizzled. And now they're getting letters from Nasdaq saying, "Oh, you're below $1, you better get."
Right.
So I don't want to mention any names, but yeah. So it doesn't. The Nasdaq thing is not the magic.
The magic bullet.
Yeah.
No.
Yeah. Let's see if we can answer. Okay. Cash burn. What's going on with cash? How's the cash situation?
Yeah, we've achieved our goal under $1 million a month, and we're continuing to cut that burn down. I might even as we spin out these businesses, like ARway is getting spun out with, let's say, 20 employees. So our burn will go down quite dramatically per month once that is spun out, because it'll have its own P&L. We won't be responsible for paying their salaries. So that'll happen, and that could continue to happen. And our burn could get down to $500,000 or less a month as we continue to spin out some of these assets.
Okay, excellent. Evan, we're at the 1 hour mark. I think everybody wants to get back to the pool now. It's July 7th here. Okay, Evan, thank you for the update. Thank you everybody for joining our live stream. We look forward to having you back on whatever the next big news announcement is going to be.
Yeah. Okay. Perfect.
Thank you, everybody. Okay. Thank you, Evan.